Good day. Ira Epstein of Linn Associates with your financial market wrap-up, and this is for Monday, the 8th of June, 2020. I'm a bit late today. It's about 6:20. It is absolutely gorgeous in Chicago, so I took a walk. Actually went out this morning, took a 3-mile walk early in the morning. When I tell you early, let's say 7 o'clock, and took another small one just now. So why not enjoy the beauty of what's going on? And the city is opening, which is great. So we've got the Fed tweaking its Main Street lending program because it's fearful that the way it's set up may not attract what they're hoping to get done for businesses that what they call small. But trust me, their definition of small is not your definition and mine, but they are trying to get to that person. So do they belong there is a question. We'll find out. The FOMC meeting starts tomorrow, ends on Wednesday. We will get the monetary policy statement from the Fed at 1 o'clock, and then the real important part at 1:30 as the Fed chair fields a series of questions. So that will be where the interest of the market comes. In the meantime, the stock market's the never-ending bull market right now. We had the never-ending bear as the market crashed from February through March, and now the NASDAQ cash and the S&P cash. Both of them have recovered, and some making new highs like the NASDAQ. Unbelievable action. Gold market not falling apart and all that. The NASDAQ gained today, but it's the other indices that are moving. And that's what bull markets do. You get rotations in them. And I know I'm going to get notes. Ira, it's a bull market now. Well, the bear phase ended. You got over that 18-day average. I jumped on it, and I said starting 2 weeks ago, darn it, this thing's reminding me of the end of 2008 and 9, and at the end of that correction in 2015 when the markets didn't look back. So yeah, I think that I've done my job there. Do I still think that it was unusual to go down the way we did and not retest it? Absolutely. Fill a room with 100 chartists. My guess is those chartists will say that number just about every time is going to be retested. Didn't happen this time. Can't answer why. Don't care why. You move on to whatever the next chart part is doing. If you're watching the notes and bonds, be careful of them. Obviously, going into an FOMC meeting, anything can happen, and the unknown is what's always gets you there, so please be very careful. In the energy markets, we saw over the weekend that we did get OPEC make a deal, but the Saudis today made a very interesting statement. They are not going to cut their production any further than they have. So those countries, and there are 4 of them that have to get in compliance. I have doubts that they will. The deal's only through July. As the market comes up and you're getting up here, and this is the August contracts now, $41 in Brent, $39 in the crude. Come on, there's room to hedge in those markets. So as we take a look right now, and we'll go to the S&P 500, look at this recovery. It's not in the futures market an all-time high close. Okay, but it's phenomenal. You've gone from 2438 roughly up to today, 800-point rally in round figures. Unbelievable. When you take a look at the chart action, once you put in the sideways action and came out of it, away we went. And that's the importance of understanding Bollinger Bands, which I'll show you. What's the pattern on the charts? Higher lows, higher highs, bullish. Look at the crossover. We just had another one. So let me take you to where you're at. This is what the market looked like on Friday. The daily charts. You had the 18-day average underneath the 200, but it already crossed the 100, and you went up for a spike high. You came up, and then on today, you've got 306.40 versus 306.21. You have another follow through. I wouldn't be surprised if you make another high in the market because of that. So you've got all the bullishness coming into the market. It's not set up in a classic bull. In a classic bull market, the shorter term average, which would be the 18, would be over the 100, which it is, but the 100's down here, and the 100 would be above the 200. You got a ways to go for that to happen. It's not going to happen anytime soon, I can tell you that. What's the market leaning against? Well, let's go back, because this is what I was explaining to you. Whenever you look, and this is what I teach in my charting course. If you go to our website at www.iraepstein.com under the word education, our charting course is there. When you get sideways action, you often see it in Bollinger Bands. And Bollinger Bands are a function of price and volatility, so and time to an element. So if you look at all this, what's going on, you've got this action, and you always get whips. Inside of narrow bands like that, you'll hear me over and over say, be careful. The market tries to go to the upside, frustrates traders, then breaks out, gets no follow through, back and forth chopping them. What I look for are two closes over the upper Bollinger Band. And when I get them in the top part of the day's top part of their ranges, it's just a sign that you're in a breakout to the upside. Now you have attempts at that right back here, if I'm correct, if we take a look. Right there. You finished at 29.94.50. The Bollinger Band was 30.01.62, so you didn't make it there. You tried it here, and then you got thrown back again. So all you did in this particular instance, instead of a classic breakout, you'll hear me say you're riding the Bollinger Band. And that's what it's called. And what happens when that occurs is you can see it. The market won't get away from it. It just keeps hitting it over and over. Watch. And that's called the riding of the band. Now you come down to some key moving averages, and they're often support figures. I don't show you all the averages I use on this. That's in my morning subscriber video, and I think those people know what I'm talking about. But this bullishness is often accompanied by the slow stochastics, the two numbers that make it up, the K and the D, going sideways over 80. And it's a tip-off. Until that's lost, this market is in a bull mode. It is converted from overbought to locking in a bull trend, and you'll know it's over when the red line closes under 80. In the NASDAQ, you did the same thing. You embedded the reading. You did not get the classic breakout of closing over the upper Bollinger Band. Instead, you went to it, hit it, back off, hit it, back off, just continuing to do that. The Dow, right here, tried to break out as well, got thrown back, and it's been riding it. What's the common element in all of them? You've gotten that bullish embedded reading. Now the Dow's given you another bullish crossover. If we take a look in this, this was Friday, here's today, and you just are getting that crossover on the close of business today. Now you're moving even higher, and with it you're making higher highs in the market already. In the Russell, you had a bullish crossover. Always watch these. Right here, you got the 18 under the 100 today, and now tonight you're getting that crossover. So the market's riding the upper Bollinger Band with the embedded reading. The bulls are in control until they lose it. In the VIX cash, you might say, well, we went down to that VIX cash number this day. Right here's the first time you hit it at 24.66. That's where I think the pros wrote puts. Looking for the market potentially. They could go to the 100-day average. I'm not keen on this trade. That 100 days too close. Had it not been there and above the market, I'd have thought they'd have gotten more aggressive. I don't like that the market's also embedded. That's not an ideal trade for them to be writing on. So far, they're not hurting. It's 24.45. We'll see what happens. Now, as these numbers come together, the last thing you want to see if you're going to write anything, you want to lose that embedded reading. It hasn't. Normally, you're not embedded when I see them writing. In the T-bonds, you went back to the 100-day average of closes in the lower Bollinger Band, and the market's found some footing. I think it's going to wait until it sees what the Fed does. I think the Fed is looking not necessarily at the charts the way I'm presenting, but they're realizing interest rates are going up. They can easily cap them. They can come out and just offhanded say, we're not going to let that end of the curve yield get away from us too much. Bingo. How are you going to fight the Fed? They have a bigger balance sheet than you do. In the September T-bonds, remember, I've moved to the SEPs now. Same thing here. And in the 10-year note, didn't quite get there. We had a couple of days under the lower Bollinger Band. You're trying to get back in it and you're oversold. But these are classic breakouts. And when I say classic, under the lower Bollinger Band, and again, That's classic to me. Now, until you get back over, I think the pros on the rallies are going to be looking to get short. I'm not saying they're selling them here. I'm saying they're going to look to get short. You need to get in that market, and I'll just show you. You need to get an embedded reading or do something, because otherwise you're just oversold. Save your ammunition might be what they say to themselves. In the dollar index, I'm still very bearish. Got the embedded reading. You're riding the lower Bollinger Band. This was the first day you didn't hit it, but that doesn't mean anything. Eventually, you don't keep hitting it every day. But again, a breakout to the downside of this sideways action, and you get a chance to see that. And you're looking, do you have an embedded reading? No. But I've certainly got a market that just closed deeply under. And this day, it's not a breakout. That day's one day. This day, the close was 97.66, right under the market. But I don't have two in a row at the bottom part. This is just called riding it. So what happens is the conversion starts taking place here, because now you get your embedded reading, and that just is the kiss of death until you lose it. That means the market's just locked into that trend. In the Eurocurrency, we had seen the breakout of this sideways action. This wasn't anywhere near as neat as the dollar was, but we saw the action take place here, and once that grabbed with the embedded reading, well, you've had a heck of a run. Lose this number, get it now under the 80 level, and you got to be careful that you're not going to see price and the 18-day average try to make a run at each other. In other words, a price correction in the market finally. In the Japanese yen, the yen, this is called an embedded reading. This was Friday. Today, you lost it. You want no, for my money, you want no part of being short now. Even though you've got pretty stiff resistance, 66 to 69.5, the odds favor that the market's going to go there. And since we weren't trending, if you look at it, a higher high and lower low, I don't know what to do with it. In Bitcoin, you have flat momentum. You have a market that's got lower highs, lower lows, and staying over the 18-day average. What it's really doing is it's getting into those Bollinger Band sideways action, and from there we'll see what the next trend direction is going to try to be. August Brent versus WTI crude. You can see how the market's just sitting here hugging that 18-day average of closes. I don't like what I'm seeing tonight. The market just moments ago had lost the embedded reading. You need a really strong close tomorrow. Otherwise, you lose that reading. I'd be saying to myself, oh, okay, this is probably a good enough price to maybe walk away from this market for a bit. In the WTI, you haven't lost the reading yet, so that tells me until it gets a little closer, you got to be careful. But I feel the same way about this market. Rebob gasoline, still the embedded reading. If you lose those numbers, out you go. If you don't, the market gets bought, I think, by the pros in the morning. In my morning subscriber video, I show you the key moving average that I think they buy. I showed it today. I show it every morning, in fact. And last, the nat gas. Well, the nat gas is just an oversold market that doesn't want to embed. All of a sudden, notice how the Bollinger Bands have flattened out here and here, but they're too broad. I don't see anything to do with them on a chart picture like that. So I go sidelined when I see something like that. You know, I know a lot of you like to trade these stock indices, and you do it via the ETFs, some of the spider action. And of course, we're in the futures market. We even trade the 1/10 size futures. But we have something for all. So if you're looking for information, and that's really what I'm about, I'm giving you the information. I'm a broker, of course. I run my division of the Ira Epstein division of Linn Associates, and been around a long time. We're a little different. We're not after the lowest price commission. We're after service. My brokers talk to people. I talk to people. It's different. And that's, you know, we're the old-fashioned type. How do you compete with zero commission? You don't. You beat them on service. And that's exactly what our clients want. So zero commission people elsewhere. Research, probably not going to do a lot better than what I offer you with all this at prices that are reasonable. You can go to our website at www.iraepstein.com and go up to the word research. It explains everything there, how you can get our different research packages. Try it yourself. They're intentionally low price, packed with information, a lot of it. I'm Ira. You have a good day, and I'll see you all tomorrow.